Good morning, everybody. Hope you had a great evening. It was a cool one here in Wichita, where it's forecast to be in the 60s through Friday and drying out from this weekend's big rain. We could probably use a little drying out. There's all the ponds are full. There's plenty of mud to go around, and time to dry some of that up a little bit. Okay, the markets are up overnight because the EU said they were going to accelerate purchases in May and June and probably in September after the summer. So more money will be thrown at the market as the EU takes probably more than their planned $60 billion per month of securities off the market. This is pretty strong demand. I mean, to think about it, $120 billion worth of extra demand for paper out there, in addition to the normal demand that's created from business. So that's a big chunk of buying if you think about it. You can see right here from a volume standpoint yesterday that the market needs volume in this area. You can see if this were to normalize, which is what all distributions try to do over time, that we need volume between 12 and 24, and I think that's probably what the market is going to do. We're going to fill in. So I've got a sell at 23 to 27, and then 31 to 03. On the buy side, I'd like to buy cheap against 12, but it may take a 17 to get in, so I'll make the first buy 13 to 17 and then 5 to 9. Do have news this morning. Starts be at 8:30 Eastern. $1.029 million, and they'll watch that to see how much is single family and how much is apartments. Here in Wichita, all the big real estate developers, all commercial activity is, for the most part, build to suit. You'll get some spec against some big national chain coming in and anchoring a new shopping center, but beyond that, the money that anybody can go out and get their hands on is for apartments. As banks move from the oil patch to real estate and manufacturing and back between, right now, apartment loans, if you got any kind of credentials, you can get. So the split between single family and apartments will be what they'll focus on. Tomorrow we have the FOMC minutes, so it's pretty quiet news week. The IMF has leaked what they think is going to happen with Greece and their ability to meet payments June the 5th in July and August. They spike in July and August, and they don't have the money to do it without getting it from another source. So the IMF has signaled or has created a path for Greece to leave the European Union. And some people will pay attention to that. I think to get through the summer, and I think Europe needs it too. I think Europe has probably resolved or resigned themselves to the fact that Greece will probably be leaving the European Union. They just don't want it to happen instantly. And I think it's probably in Greece's best interest to leave the European Union so they can get back to business as usual. Gradual devaluation of their currency to let inflation cover for the shortfall between tax revenues and spending. And the other side of it is the riots that are going to come as 55 retirement ages, that's raised, as pensions are cut. It'd be nice from the European Union standpoint to have Greece only able to point at Greece, as opposed to it's the EU's fault. So I think that's what we'll probably see happen, is that It won't happen instantly, but the transition to Greece being out of the European Union is probably afoot. Okay, similar situation. The volume, you can see we've got this 54.18 to 54.29 area. We've got this area down here from 53.29 to 17. So these are the areas where I expect some normalization. So if we just look at the low volume numbers, we should have support at 28. If we're going to fill in volume today, we should have some pretty good resistance starting at 54.16. Obviously, we didn't make that in the overnight session. If we look at yesterday's activity, we need volume from 23 all the way up to 24, or 1 full point. So where might we find buying today in the 30-year on the assumption that it's going to hold because of the EU's announcement overnight? We've got this 2-letter ledge at 26. We've got this 4/5-letter ledge at 29. We have extension at 23. We've got a single print at 18. So this 25 to 21 area, I think, has got a reasonable chance to hold, and it might take a 29. Don't know. A lot of it just depends on how strong the E-mini is today. And then if we break that, 9 to 13, put us below this volume number. On the sell side, last rotate up stopped at 8, so 7 to 11 coming inside the overnight high. And then because of this need for volume right up here, I'm going to jump it up 19 to 23 for sell 2. And I'm starting to open up our number 2 levels by 1 level. Number 1 levels are put there if the trend is going to continue. If we're looking for continuation, our B1 and S1 price levels should hold. If we don't know what we've got, a little higher, a little lower than that. So it's been really, really easy to get to our number 2 points. And occasionally our number 1 levels do hold, but usually it's our number 2. And I've had to open those up on the 30-year, given the volatility added by the knob spread. Okay, gold, crude oil, commodity prices are lower overnight because of what the EU did. The money's flowing into financials. But again, I don't think this market will break because of all the trouble that we have. Our number 2 buy area last night was 15 to 17, so we'll make it 15 plus or minus for buy 1. And then 10 to 12 for buy 2. So we've got really support at 10 to 12, the way that I see it. And resistance 23 to 25. And 28 to 30. And what you can see right here is that we've got a great big P. And I think it's a P for the right reasons. The stuff going on beneath the surface, the stuff being done on the surface right in front of our eyes, it's got to make you want to buy a little gold or silver if you're planning for survival, because silver comes in much more manageable sizes. You don't have to get $1,200 for a bar, and I understand that they come in tenths, so $120 for a tenth of an ounce. You don't want to go around with $100 bills. Silver allows you to go around with $5 to $10 bills in your pockets if we do get to one of those serious crises that'll last for 1 to 3 months. Not saying that that's going to happen, but the demand for silver and gold probably is going to stay. Okay, crude oil is off overnight on the EU's action. Take that money and go buy paper and then sell them back to the EU. And what do you think the big primary dealers and big banks around the globe are doing right now? And they're the ones with the money. That's exactly what they're doing. They're the market makers. They know where the paper is. They go out and put together bundles for the European Central Bank. Everybody's happy. The banks make money. The European Central Bank gets what they want. They support their money. They support the equity markets. Life's a beautiful thing. Okay, we're 59.55. We are pointed lower, so we're going to take 59, 59 and a quarter by one. And then 58.50. We'll make 58.50, 58 and a quarter by two. Basically looking for 59 to hold on the first run down. On the sell side, we have a London high at 60. Last trade up was 92. We're at 53, so 60, 60 and a quarter. Sell one, and 60, 50, 60, 75. Sell two. Okay, the euro just got smacked, and we're going to look at the F1 screen. And you can see when that announcement came out, and it was London, London just absolutely fell through the floor. So you see right here we got a pretty clean break in the market at 111 even. You've got volume at 111.50 to 60. Got a low volume number at 111, volume at 111.50 to 60, based on the most recent high volume area. And this is what it looks like. So we're at 83, and 112 even is kind of a round number, so sell one. 1201. Sell 225. On the buy side, 50 will bounce the market, so 50 plus or minus. And it's hard to see the market breaking big time after what happened overnight, but it could. So we'll make 1125 by 2. So a little bit lower based on the overnight action. We've got the London low here at 63, so stops beneath that. Be the first play, and we may have to raise it up too. We'll just have to see how it goes. Okay, the E-mini made another new contract high in Globex overnight. It is pointed higher. Remember back at the first of the year when end of the year people were talking about one guy had a blow off top 2200, 2250. Well, we're getting close to that. We're in that, we're above 2100 now, so that becomes a possibility. So we'll talk about, you'll see 2150 is the next stop, and 2200 even, and then 2250 as the market moves to accommodate these recent moves. It's being done on very low volume. Large institutions are already long the stock market. They're not hedging. They're not locking in. They're not looking for protection. So the easiest trade is going to be failure to take out 33.35. That's going to be sell failure to get through that. Then 39 to 42, 41 will be sell 2. On the buy side, have yesterday's high at 29. We've got the rotate down at 30, so 28 to 30 by 1. It's very, very aggressive. They've made us pay up to get in early. And then 25 plus or minus for buy 2. I'd like to lean against 25, but the history or pattern on this is that you got to pay up to get in early. and I don't expect that to change. What's the market up overnight is up on the speed up in QE1 from the EU, so it's tied to a piece of news. Permits are looking at 1.07 million. Starts are looking at 1.029. And they'd like to see a starts number bigger than permits, and they'd like to see a pickup in single family home.